And good morning, everyone. Welcome back to NeelyFX. My name is Michael Neely, and this is the channel where I talk about foreign exchange trading, prop firm trading. Foreign exchange is also known as Forex in the trading world. And I've been following it for about, I don't know, 20 years or so. And just putting everything back together again and integrating AI and building building EAs for expert advisors for the MetaTrader 4, MetaTrader 5 platform, as well as some indicators. So highly recommend you check out NeelyFX Trader at mql5.com if you haven't already. That's my profile there. I'll show you in just a minute. But in the meantime, we have some other things to talk about. First, it's Monday, August the 10th. I mentioned in yesterday's video to check out Michael Boutros' video. I think he's on vacation this week. So Forex.com is cutting him loose for a week and letting him go visit stuff. But at any rate, what do we have to talk about today is first thing we need to talk about is how not to lose money trading Forex, which is very highly possible. As a matter of fact, it's likely that you're going to lose money trading Forex, and those are the risks, and you need to know about them. They go like this. This channel is for educational and entertainment purposes only and does not constitute trading or financial advice. I'm a professional trader, not a broker, trading my own capital. I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration at this time. I have held NFA registration in the past. It was about 22 years ago. Forex trading is highly speculative with a high risk of losing some or all of your investment capital. Only trade with funds you can comfortably afford to lose. And here's the CFTC risk disclosure. Forex trading carries a high degree of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before trading Forex, consider your investment objectives, experience, and risk appetite. You could sustain a loss of some or all of your investment capital. So with that, let's go ahead and go into some more things. What do we want to do next? I think first we want to talk about me some more. So let's talk about me some more. Here are this is MQL5. These are my products that I have at MQL5. I need to work on that description because apparently it's a product rating lowered for a bad description. So I need to work on that. Compare it to these other two and find out why that one's not working well. But anyway, so it's not rated well because of a bad description. So I'll work on that. We have 11 downloads on the Bollinger Band and RSI Mean Reversion Pro for MetaTrader 5, and the Bollinger Band and RSI Mean Reversion Pro for MetaTrader 4 is at 4. And I've got to admit, I'm kind of disappointed in that one. That's why I took it down to free, because once I added it, it's executed one losing trade so far this year, and I know there are other opportunities that it could have come in stronger. So I need to perk these up a little bit and make them a little bit more better, for lack of a better term. No, I've got one free indicator, the Fibo trend continuation zones, and it shows where it's likely to pull back over the last, and then there's 53 downloads on that. So a lot of people are interested in that. That's interesting. I think so. I'm busy at work on a whole bunch of stuff. Got the vol squeeze machine learning breakout on the way, as well as the key level machine learning filter on the way too. Those are both gathering research right now, so we can figure out what the best thing to do, best way to work on those is. And then we have another one over here. My next repo here, my 100th repo, is the Schwab Signal Engine. So I'm working on some stock stuff, and then there's some other challenges I did along the way. I've been on GitHub for 12 years. I just had my channel to it there, so that's might be fun too. But at any rate, that's some of the things we have going on here. I should change that website. That's websites. Let's see what's on. I don't even know what's on michaelneely.net. That's just a generic WordPress thing. I should build that site out. I haven't worked in WordPress in years, geez. But at any rate, and then let's go ahead and take a look at something else that might be of interest. This is my latest prop firm challenge from FXFI. I'm not sure if I'm going to get funded or not with these guys, because the ETFs are basically illegal in the United States. Pardon me, CFDs are illegal in the United States. Those are I'm not sure what CFT stands for, but I know that they can trade them in England, but they can't trade them here thanks to the Dodd-Frank Act that came out in 2008 that Big Bad Wall Street hurt the world with a real estate collapse. In all actuality, it was the government removing standards for approving real estate loans that was the prime catalyst. We won't talk about that. But at any rate, let's go ahead and it's another episode. If you ask me, if you're looking for government to be the solution, you're looking in the wrong place. Because government is never the solution. It's the problem. But at any rate, it does fix some things, though, I guess. I don't know. I'm not going to talk about it. But at any rate, we have, first, let's go ahead and get into, are we ready to get into charts? No, we're not. We need to get into this. Let's talk about trading Forex for profit right here. This is my website. This is the website that makes all the websites work. This is a fun little website. It is one that I built. It has all the, this is what I started working on in January to kind of help me become a better trader, because I started listening to some podcasts, some trading podcasts, and I kept hearing, oh, you need to journal your trades. And I was like, oh, I never journal my trades. Right now I'm too busy to journal my trades. I'm building it out. But it's one of the things that you can do is journal your trades, and this is how you do it. You come into the, first you sign up for an account. Billing, you can start for free right down here. And for one trading account, and then it gives you a basic risk calculator. Should make that public too. And then after that, we have the pro version that gives you unlimited accounts and prop trading challenge tracking, as well as full analytics and an advisory system too, to help you. And the advisory system is kind of a neat thing, but I think I'm going to take it out because it is implying that this is going to be monitoring your trades at some point, and it's not. It's just a journal right now. At some point, we may be able to integrate with a broker. I don't know, but right now we're not doing that. We have everything in the Pro right here for $39 a month, plus premium news and commentary from me and other people. And then we have advanced analytics and archives too. So we've got some advanced stuff. And so you come in here and here's your risk calculator. This is what threw me off, is that you come down here and you try to put it, develop your risk, but then it also has the high impact advisory active here, but you got to take this down to 0 to get the one you're looking for. So if I want a $761 account, my account's bigger than that because I grew it. With a 2% stop loss and a 25 pip one, my broker is 13. Then that should give me a 15 pip stop loss right there. So 65 cents a pip. So let's say I want to take up to 50. We're looking at a risk of $30 a trade. Okay, so there's that. Well, why isn't it, when you change that, why doesn't it change it? Oh, it is changing everything else. It changes your lot size. Oh, okay, got it. It changed your lot size, but it didn't change your risk. So it recommended a lower lot size. Okay, got it. That makes sense. So there we go there. We have your journal. You can add your trades in here. You can either start with your planned trades, because all trades are planned, because that's how we trade. We trade with planned trades, or you work on a continuing planned trade. For example, this trade right here that I'm getting into, where is it? Is a continuation of the of this bottom fishing type trade we're doing here. As long as the as long as the Japanese yen doesn't collapse. As long as the Japanese yen doesn't get supported overwhelmingly, but we'll see what happens with that. Meantime, let's go back to Trading Forex for Profit. We have this, and then we also have some other things to take a look at. So let's go back to the public site. But I highly recommend checking out Trading Forex for Profit. It's a site that I'm building. It is a lot of fun to build and a lot of fun to get better results on it. First, let's look at market pulse. See what's going on in the market today. Strong risk on. So that's why I'm looking at the GJ and the UJ right now. The pound versus the yen and the dollar versus the yen. Those are the two. For full disclosure, those are the trades that I'm getting into right now. That is not trading advice. That is just what I do. Follow at your own risk. Do not give out trading advice. If you're looking for trading advice, turn to your broker. They're not going to give you trading advice either. Best thing I can recommend is just get some experience and run with it. The only way you can get some experience in these markets is to lose money first. Hate to say it, but it's true. Okay, there's a bank holiday in Japan, so that may be why these are all trading up, because there's a bank holiday in Japan. They're not going to do anything today to stop the rest of the world from realizing that they're bankrupt. Yeah, I said it. You can't run at 236. Let's see what that is. This is another great site you should check out. Economics. Debt-to-GDP ratio. United States debt. Okay, here we go. That's what we want. We want the whole country list. And Japan's is right down here. It's spelled with a J. Iran's is, 36 to 8, because they're getting decimated right now. I won't talk about that. 249 to 251% debt to GDP ratio, and it's only getting worse because it's the government keeps printing more and more money, and they don't have any to back it up with. So they're over 258%. Canada's 114 to 110. The U.S. is way down here because we're no longer ranked at the top of anything anymore at 123 to 122. So we're going to be in the same boat Japan is one day, where the government has just simply will just simply run out of money. Let's see what Argentina is right now, just for grins. Argentina's at 78 to 82%. So they're at least running underneath their what the money they're taking in, which means that the government is actually building money and actually becoming it's actually doing better, but it's our country is not. I just want to throw that out there. Let's see. With that, let's go ahead and get in some charts with time. Running out of time quickly. Let me see. We have let's start with Bitcoin. Already talked about that. Risk on. Bank holiday. Okay, good. Move on. Bitcoin. For today, we are on the weekly view. We don't need to be in the weekly view. We need to be in the daily view. This is the daily view. And then this one over here also needs to be daily. It also probably needs to be refreshed, and I didn't do it earlier, so this is probably going to be a thorn in my side this morning. That's okay. Day. We'll get to that in just a second. So first, Bitcoin right here, 65.054. It looks a little stretched out. It looked like it might be the top of that range. So if you're trading a strategy for what do you call it? If you're trading Bitcoin on a range base, you might be at the top of the range. Might be time to consider going the other direction. Then again, maybe not. It is forming. It's starting to reform this this bullish flag right here, so it could take off again. Who knows? I do not trade Bitcoin. I do not. I'm not a Bitcoin guy. I'm not a crypto guy. But at any rate, moving on. We've got the U.S. 10-year. U.S. 10-year at 4.65%. 6%. Wow. That is not good. That is higher than we like it. That is means that a lot of things means money is flowing out of government bonds and it's creating more debt. Japan's at the same time is looking like this at 2.809%, and earlier it was trading at 2.91%. So that is something that we're going to definitely keep our eye on, because we have the what's called the carry trade right here. It's the difference between these two interest rates. You can convert yen to dollars and then put them into a U.S. asset, and then earn the difference in these interest rates. So the difference in the interest rates right now is 1.86%. So you would get a 1.86% return on your money just by sitting there and doing nothing. That is the what drives the dollar versus the yen trade. So that is also another way to do it. And right now, these two are not converging as closely as they ever have been. The closest they were was during COVID, and the yen trade did not break down then, and is not breaking down now. So it is that's one thing to consider. That trade will keep going on. It will still be bumpy, but it will still be there. So don't turn your back on the yen trades, especially with Great Britain's right here at 4.9% over the Japanese yen. It's 2.8%. It's even better. So I'd say 2.1% interest rate just for doing nothing, just for putting your money there, letting your money do work for you, which is the whole essence of investing. Okay, so euro versus the pound. That's next. Euro versus the pound. It's pound starting to gain on the euro. Oh, I didn't go down the. Oh, well, that's okay. Market Pulse also shows you which currencies are leading and which currencies are lagging. So I'd highly recommend checking that out. The DXY, it's right here. This is a basket of currencies to reflect how the dollar is doing. Right now, the dollar is down. In peacetime, it does tend to go down a little bit more, and wartime tends to go up. So maybe there's a thing going on. Bottom of ceasefire gap. We can probably take that one off. There's been like 5 ceasefires ago. But anyway, here we have the 99 point, and it's clearly filled that gap. Let's take that out. We have the DXY at 99.7%, so maybe things are cooling off in the Middle East a little bit. The euro versus the dollar is going to be the exact inverse, and it's not going anywhere today, so that's something to kind of take in so far. Might a little bit later. Pound versus the dollar, right there, 135. Basically the same place it was. It opened on a close on Friday. Dollar versus the Swissy, 80.83. Just a hair under 81. Might be going somewhere, may not be. I don't know. Pound versus the dollar. I mean, the dollar versus the yen had a big surge. Had a 100 pip surge so far. So that's kind of interesting to keep an eye on. We're gonna. I'm actively involved in that trade, so I will keep you posted on how that's working out. Pound versus the yen. 214.37, running into some resistance right there, but not kind of blew through this resistance area right there. Could pull back to 22.14 again. That would be make for an interesting day. Euro versus the yen, pull back a little bit to 183.50. That's at least a level I can wrap my mind around. 50 being a psychological level that that it's kind of hard to deal with sometimes. Canadian versus the yen, 113.88. Again, I could pull back even further to 59, but I'm looking for pullbacks right now because I'm very nervous in trading the yen trades. But sometimes it's you just have to get over it and just get into it and get your feet wet and see what happens. Aussie versus the yen, 112.20. Then again, I do want to be out of these trades by lunchtime because just when the Japanese market's open, it's going to get weird. All right, NYMEX crude oil right here. Aussie versus the yen. Did I talk about that? 112.19. I do want to be out of these trades by 5 o'clock today. NYMEX crude oil, 78.79. Always a good time. Like to see that down under 80. Would like to see it under 70. That'd be even better. Dollar versus the Canadian. 139.42. Again, that's looking like might trying to form a little bit of a bottom right there, but then maybe not because it's looks like this whole trend is headed down for now. Where? I don't know. But it is stopping right there at that support level, though. That former resistance level back here is turning into support now. Aussie versus the dollar, 70.65. Might be going up on dollar weakness. Drifting higher, as it were. Let's get into the precious metals now. 43.39. Gold is kind of stymied right there at 43.39. Does not appear to want to go anywhere. We're still probably waiting to see what's happening in the Persian Gulf, aka Iran. What else? Platinum, 1752, much higher than 1600. So we all like that. Bollinger Bands is starting to widen a little bit. So maybe some more traffic, more money's coming into platinum on the bullish side. Palladium, kind of chilled out a little bit. Kind of cooled off last couple of days, but still 1368 is not a bad place to be. All right, silver 63.98. Not my favorite CFD to trade, but I tried it. It doesn't, and it hurts because it is extremely bouncy. The futures contracts may be the better way to do that with maybe Apex or something. I've not tried Apex yet, so do not take that as trading advice and jump into Apex. I'm not into there yet, but a lot of people with Ferraris are. Let's see. Software sector is about the same place it was Friday's close. Mag 7, pretty much the same place it was at Friday's close because they haven't opened yet. So that is about all I've got for today. Again, I do want to come back here and look at the market pulse real quick. And so we've got the Canadian is very strong. That's weird. The currencies as follows are the Swissy, the pound, the euro, And this updates every 15 minutes, and the Japanese yen is very weak and falling. So that's good to know. Let's go ahead and get a refresh on that, and everything stays the same. So this will refresh every 15 minutes or so, so that'll give you a better idea of what's going on. But with that, that's all I've got for today. You guys have a great one, and I will talk with you later. Bye.